It's been a mad, mad week in the markets. Now, just in case you were wondering why the markets fell this week, it was fairly clear in the charts that we were getting a bit lofty, and we got there fairly quickly. So, after 6 straight weeks moving up in the face of relatively disappointing economic data, the Fed balance sheet unexpectedly contracted for the first time in weeks. Oh, what a coincidence! And for more shocking news, the market implied odds of a US China trade deal slipped back below 50% today. My opinion is that after shoring up relations with North Korea, maybe we should send official Ambassador Dennis Rodman to patch things up in China. It can't hurt. And then there was Ray Dalio and Bridgewater. If you remember, at the beginning of 2018, Ray Dalio said during one of his annual speeches at Davos that investors would feel pretty stupid if they were holding cash. And then over the following 11 months, one of the biggest market blowups since the crisis left US stocks in the red for the year. But somehow, Bridgewater emerged as one of the best performing firms of 2018, with one of its funds up double digits. Now, just a few months ago, Bridgewater enlisted Goldman Sachs and Morgan Stanley to help structure a massive bet that will pay off if, between now and the end of the first quarter, global stocks contract. According to the Wall Street Journal, Bridgewater has placed a bet using put options. So if the S&P 500, European stocks 50, or both decline before the put options expire, then Bridgewater will make money from the bet. If the stocks rise, then those options will likely expire worthless. Bridgewater paid $1.5 billion for the options, which have a notional value of $100 billion. In response, Ray Dalio stated that the Wall Street Journal is wrong and that he wants to make it clear that Bridgewater does not have any such net bet that the stock market will fall. Dalio went on to state that we are now living in a world in which sensationalistic headlines are what many writers want above all else, even if the facts don't square with the headlines. You can believe me, or you can believe the Wall Street Journal writer. Based on my understanding of the information provided, it appears that there's some truth to both sides where Bridgewater likely bought the puts to hedge or protect the long positions in case of a contraction, but at the same time, Bridgewater is not net short the market. I'd rather put my trust in the charts. So with that said, let's take a look. And we're going to look at two charts today, beginning with the iShares, the Russell 2000 ETF. The symbol is IWM. The close on Friday was 158.22. Now I want to start with the monthly and then we'll go take a look at the daily. And I'm using the Russell 2000 simply because the other indices look fine. And the Russell, though, is the laggard of the major indices. But until the Russell can join the others, then I don't think we can say that we have a confirmed rally or uptrend yet. And with regard to the iShares Russell 2000, we've traveled sideways within this channel here. We're at the upper channel line here, knocking at the door, but haven't been able to break through that. And looking down here at the MAC, you can see that it's struggled a bit here to base and bottom. It is, in the last, say, few months, moving in the right direction, but it's going to take another month or so before the black line or fast line moves through that slow line or the red line. Now, hopefully, it's going to set a formation like this back in 2015, 2016 with the fast line moving up and through with an extended uptrend. That's what we're looking for. So moving on down here into the histogram, things look good with improvement there all the way through since the beginning of the year. Price rate of change, it's having a little bit of trouble, but it's trying to set a bottom base here. We need some more sawtoothing before it can actually base here with the fast line moving through the slow line. Now, the relative strength index is at a moderate 55.53, so it is above that midline or 50 line and does show some improvement, such as the histogram. And then the stochastics pretty much echoes the same thing. Volume looks fine. And then the Williams has run ahead. It's in the overbought territory, but it can stay up there for an extended period of time as it has done in the past here. But definitely that looks good, looks strong, and looks like things want to move up. It's just that it hasn't been able to break through that upper channel line. So let's go now take a look at the daily chart. And now looking at the 1-year daily on the Russell 2000, we can see here that from that base or bottom in early October, we had a pretty good run all the way through to early November. But since then, we've been trading sideways in this channel here. And actually, it has a slight decline to that. And I think things are starting to break down. You can see that here in the MAC with the fast line coming through the slow line recently and heading on down. It's not accelerating on the downside yet. We'll just have to wait to see in the next week or two to see what happens here. But definitely, I think things are going to be waffling down in the near term here. And you can definitely see that also here in the histogram, as well as in the price rate of change into the relative strength. We're at that 50 line, more or less, and into the stochastics, and volume looks fine. But then, of course, the Williams headed on down. Now, the Williams did reflect off here, but we'll see. I would imagine that's going to come on back down here with the rest of the weight in these other oscillators. So effectively, because of what we see here in the daily chart, I don't think we're going to be breaking through in the monthly chart on that upper channel line. So we're going to have to wait for the confirmation of an uptrend. It's going to be a while. It could be weeks. It could be a couple of months or so. But for now, it looks like things are eroding and on the downside. So I would have that expectation here in the near term. So for today, that's ChewDog Charts. Thank you.